Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks, finance, and investing. I am your host, Lewis, and I'm excited to share today's top stories with you. Whether you're a seasoned investor or just starting out, this is the place to be for unbiased and informative discussions on the markets. We have a fascinating show lined up for you today with a mix of predictions, trends, and insights that will help you navigate the complex world of finance. Let's start with a story that's been making waves in the investing community. Robert Kiyosaki, author of the best-selling book, Rich Dad, Poor Dad, has made some bold predictions about the future of major asset classes. According to Kiyosaki, Bitcoin could surpass $1 million by 2035, while gold and silver could reach $30,000 and $3,000 per ounce, respectively. Now, we know that predictions like these can be controversial, and it's essential to approach them with a critical eye. While some experts may agree with Kiyosaki's forecast, others may disagree. As always, it's crucial to do your own research and consider multiple perspectives before making any investment decisions. Kiyosaki's predictions are based on his concerns about the current state of the U.S. economy, including high credit card debt and potential pension issues. He believes that these factors could contribute to a greater depression, which in turn could drive up the value of assets like Bitcoin, gold, and silver. It's worth noting that Kiyosaki has been a long-time advocate for investing in these assets, and his predictions should be taken in the context of his overall investment philosophy. While some may view his forecast as overly optimistic, others may see it as a call to action to diversify their portfolios and prepare for potential economic uncertainty. As we always say on the Riskwiser Zone, it's essential to stay informed, but also to remain cautious and balanced in your investment approach. We'll be discussing more about Kiyosaki's predictions and their implications for investors in future segments. For now, let's take a quick break. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're glad you're still with us as we dive into another fascinating story. Today, we're looking at a tale of financial planning and investment strategy. Meet our protagonist, who's trying to navigate the complex world of personal finance. Our story begins with an individual who's seeking to grow their wealth through smart investing. They've done their research and are considering various options, from stocks to mutual funds. But as they delve deeper into the world of finance, they realize that it's not always easy to make informed decisions. That's where our expert comes in, a financial advisor with years of experience in helping individuals achieve their financial goals. Our expert emphasizes the importance of having a well-thought-out investment strategy, one that takes into account an individual's risk tolerance, financial objectives, and time horizon. As we explore this story further, we see that our protagonist is faced with a dilemma. They're trying to decide between two different investment options, each with its own set of pros and cons. On one hand, they have a relatively safe option with a lower potential return, and on the other hand, they have a riskier option with a higher potential return. So, what does our expert advise? They recommend taking a balanced approach, one that spreads risk across different asset classes and investment vehicles. This way, our protagonist can minimize their losses while still having the potential for growth. But here's the thing. There's no one-size-fits-all solution when it comes to investing. What works for one person may not work for another. That's why it's so important to have a personalized investment strategy, one that takes into account an individual's unique financial situation and goals. As we wrap up this story, we're reminded of the importance of being informed and educated when it comes to personal finance. Whether you're a seasoned investor or just starting out, it's crucial to have a solid understanding of the options available to you and the potential risks and rewards associated with each. And that's not all. We also have another story to share with you, one that highlights the latest developments in the world of business and finance. Network 18 Media, a leading media conglomerate, has just released its quarterly financial report, revealing a net loss of Rs 69.48 crore in the January-March quarter of 2025-2028. The company's revenue from operations declined marginally year-over-year due to a subdued advertising environment. Despite these challenges, the company remains optimistic about its long-term growth prospects, citing its strong viewership shares and audience reach across multiple markets. As we navigate the complexities of the business world, it's essential to stay up to date on the latest news and trends. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We've had a fantastic conversation so far, and now it's time to dive into the world of markets and finance. Today, we're going to discuss the latest developments in the Indian stock market and what experts are saying about the current trends. According to recent reports, the Nifty and Bank Nifty have shown some promising signs, with certain sectors like private banks, CSU banks, financial services, and FMCG looking good from a technical perspective. Experts like Sudeep Shah from SPI Securities are weighing in on the market dynamics, sharing their insights on which stocks and sectors to watch out for. Shah notes that while earnings season has just begun, with TC and Wipro reporting their numbers, the technical structure of both stocks remains weak. However, he's cautiously optimistic about the FMCG sector, citing its defensive nature during times of market uncertainty. Stocks like Nestle India, Britannia Industries, Marico, Tata Consumer, and Radico Khaitan are looking stable, with positive momentum. Other sectors that are catching attention include private banks, CSU banks, financial services, CPS, defense, India tourism, capital market space, and even some individual stocks like Kotak Mahindra Bank Day, Axis Bank, Bhaiyai Finserv, Indigo, Dutchy, Shriram Finance, Indus Tower, Bank Baroda, Bank India, TVS Motors, Reliance Industries, and Gale. Now, it's essential to remember that these are just expert opinions, and the market can be unpredictable. As always, we advise our listeners to do their own research, consider multiple perspectives, and consult with financial experts before making any investment decisions. Recession fears still linger, but some experts believe that certain sectors can provide a safe haven for investors. It's crucial to stay informed, adapt to changing market conditions, and maintain a balanced portfolio. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe. And until next time, invest with caution.